Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment's brought to you by the DNA of CRE. You know, if you're in brokerage in any way, check out, just Google this, DNA of CRE. You'll like seeing it. All right, we're talking about the office market today. My guest is Michael Roessle. He's Director of U.S. Office Analytics with CoStar, and he's with us on Zoom. And Michael, I want to see, as 2019 ended, what were the trends you saw on cap rates? Were they were fairly flat? What did you see?
Yeah, I think in terms of 2019 and really the last couple of years, cap rates were mostly flat. I would say in the low 6% range. Mm-hmm. And looking ahead, we really only see a mild expansion in cap rates of maybe 10 basis points over our forecast through 2024. And that's based on the anticipation that yields will gently edge a little bit higher. So not a tremendous amount of movement in cap rates. And historically, that low 6% range is very good. It's very low. So I think we've been in a good place for the last couple of years.
Yeah, and that's overall, I guess, of all the sales, all classes?
Yes, that's correct. That's all classes. And, of course, there's going to be outliers. Your Class A trophy assets are going to trade lower. And, of course, your coastal gateway markets, could see cap rates at 4% or sub 4% for some of those trophy towers in the CBDs. But overall, the U.S. is at just over 6%.
Yeah. And when you guys look at the repeat sales of properties that are reselling, I know I've seen you guys report on that some. And you look at the office sector in that way, what do you see there? What's the tail of these resales?
Yeah, I think it's an amazing story. It could be a 2 or 3 year hold, and there's a significant premium on these retrades. It's amazing, I think, across the board, not only on repeat sales, but really the investment climate has been terrific in 2019. And as I look back, I thought to myself, if investors were concerned at all about the weakening outlook for office demand or job or rent growth moving forward, the possibility of a recession that looms, it really isn't showing in terms of investment activity. Looking back in 2019, deal volume is probably going to approach $150 billion when all is said and done. And in fact, that would be the highest total since 2007. And if you recall back then, that was when the Blackstone Equity Office Properties deal added about $39 billion to that total. So if you put it in perspective, this has been one of the most incredible years on record in terms of office investment. So investors are certainly continuing to be very bullish on this sector. Despite all the attention that the multifamily market has gotten, office still continues to attract a lot of capital.
Yeah. Is there a potential in 2020 for that type of volume again, you would think?
I think it's possible. I think foreign investors particularly still favor U.S. office assets, even with the rising prices that we've seen during this expansion. If you look around the world, many other countries are still in a negative interest rate environment. So the U.S. offers growth and stability that really can't be found anywhere else. So I think it's very attractive not only to domestic buyers, but foreign capital looking for a home has their eye firmly planted on the U.S. And I think that's going to continue.
Yeah. And when you're talking to investors who invest in all types of asset classes and property types across the U.S., and they're looking at multifamily, industrial, retail, and these types, when they talk to you about office, what is there something that excites them about it, or is there something that particularly makes some of them nervous?
I think at the end of the day, it's fairly simple. People are always going to need a place to work. People will always need office space to go to. I think, maybe 5-10 years ago, there was a doomsday scenario where everybody was going to be working from home. And really that didn't pan out. In fact, over the last couple of years, several major firms have announced that they were completely ending that work from home arrangement, that they wanted people in the office to have that face-to-face time to collaborate. And I think we're seeing more and more of that in office design and what tenants are looking for. They want that collaborative space. Maybe the pendulum started to swing a little too far in terms of completely open office arrangements where it became a distraction. And I think now we've probably moved into a happy medium where there is that open collaborative space. And there are some areas throughout the office, some huddle rooms where if you do need a little bit of privacy or some quiet to work, that you have that ability. But, I think tenants are really realizing that, that in-office collaboration and just interaction with your colleagues can't be replicated even by, video chats or phones. So
Yeah.
I think there's going to be continued demand.
Yeah, and you mentioned that the cap rates in 2019 were roughly around the low 6% range, and you have foreign investors that are still really bullish on. I can say bullish with a nice thing, bull, right?
Yeah.
They're really bullish on the U.S. office market. So what does that tell you for cap rates and valuations moving forward in the office market? It seems like some people are concerned we're at the end of a great cycle. What would you assume that cap rates might do in moving forward?
Yeah, again, I think largely we're going to see a continuation of where we have been, bouncing around that low 6% range. And I think looking over the forecast over the next 4 or 5 years, I think we'll see a mild increase in cap rates. As I mentioned, I don't think it's going to be more than about 10 basis points over the next few years. But I do think that the mild increase in cap rates will combine with slightly slower rent growth and slower demand to produce slower price gains of roughly 1% to 2% a year in terms of office asset pricing.
Okay.
So I think we're still going to be in positive territory. It's still a good story, but I think the gains are just going to be a little more muted than we've seen over the past several years.
Okay. Michael, where are some opportunities for office investors? Are there certain property types or locations geographically or maybe suburban, where might be some opportunities for investors?
Yeah, I think it's really a story of those areas of the country that are have heavy exposure to the tech industry, or markets that are demographically outperforming in terms of job growth and in migration. So areas like Charlotte, Jacksonville, Tampa, Raleigh, Seattle, particularly San Francisco. I think those are the areas that are seeing the greatest growth and really have the strongest rent growth. And despite the deceleration in rent growth that I mentioned over the next few years, those are also the areas that are probably not coincidentally forecasted to outperform the U.S. as a whole in terms of rent growth. And I think that in turn will boost asset values going forward. CBD towers there. The name of the game across the country continues to be CBDs. Certainly that's where people want to live. That's where people want to work, particularly millennials and the generation behind them, Generation Z. I think employers are already looking towards that as millennials are getting older. Where does that Generation Z, where are they going to want to work? Where do they want to commute to? Where do they want to live? And I think that still favors major cities within those markets. But the job growth and domestic migration, it's going to continue to be Sun Belt and tech heavy.
Okay. And Michael, what would you leave our audience with related to the office sector today?
I think I'll wrap up where I began. 2019, despite all of the concern, despite all of the pundits declaring, there may be a recession and it may be a down year for the office market, it has continued its incredible run during this expansion, and I don't see that ending in 2020. Again, absorption remained very strong. Looking at the leasing activity that we track in 2019, that's going to translate into strong absorption through 2020. Rent growth, while decelerating, the pace of growth will decelerate, will continue to be positive. So I don't see any really sharp negative risks on the horizon. I don't see rent growth turning negative. I don't see demand turning negative. Things may slow down a little bit, but I think we're going to continue to see this really terrific run that the office sector has been on.
Well, that's awesome. I know you made a lot of listeners happy, including me as an office broker. I sell office buildings, so I'm glad to hear that. And Michael, great information. Thank you for joining us.
Thank you so much, Michael.
All right, and if you'd like more information from Michael Roessle and the good folks at CoStar, visit their website. It's CoStar.com. Well, stay with us. We're going to have more on the office market. I'm Michael Bull. This is America's Commercial Real Estate Show. Appreciate the show? Consider referring business or doing business with our sponsors. Bull Realty is a commercial real estate sales, leasing, and advisory firm doing business throughout the Southeast, headquartered in Atlanta. Visit bullrealty.com for more information. Commercial Agent Success Strategies provides video training for commercial agents. This training gets 5-star reviews from even the most experienced brokers. Learn more at commercialagentsuccess.com. You're invited to connect with us on your favorite social media. You can find us on LinkedIn, Facebook, and Twitter. Don't miss a show of special interest to you. Be sure and subscribe to the show on YouTube and Apple Podcasts. And at the show website, creshow.com, you can subscribe for a weekly email announcing the show topic and guest. While you're there, you also found more videos and podcasts. Thank you for watching or listening to America's Commercial Real Estate Show.